Okay, now take a look at the S&P today. Price action today managed to break below the 10-day moving average, as you can see right here. And prices did find support at the 20-day moving average, but look, we have the histogram bar ticking back down. You can see the MACD line is starting to push away from the signal line. The stochastic did get follow through from Friday's session by pushing below now the 80 line, and you can even see the signal line following suit. Now here is the S&P without the moving averages and indicators. I just want you to look at how prices are contained within this rising wedge. We have not yet broken out of the lower accelerated trend line that you see here, so do take in mind that until we get a break of this trend line, we cannot claim a reversal has transpired. But if you look on the hourly chart, I showed you before that this is a rising channel in play, and you can clearly see the points of support held. And depending on how you draw this trend line, including the wicks or not including it, we did with this sell-off today break this trend line. So we'll be watching this trend line in the days ahead to see whether we can regain this trend line or if this is indeed a back test. To really add confidence to the pattern, to determine lower highs and lower lows, we would really need to break below this support level, and that comes in right at around the 1352 level. A decisive push below that would definitely give the signal for a reversal in the S&P. And just one more thing about the S&P. This is the S&P up and close, and I just want to point out that some people will determine a reversal by the range of candlesticks that you see, and when prices are trading within that range, this high-low range for several sessions, once you break the low of that range, your reversal has been given. Now we don't have the lower highs and lower lows, so we can't add validity to the pattern yet, but we did get a slight breach of this horizontal support today. With the wick of today's session, buyers did manage to step back in, but technically we did get a slight breach of that horizontal support. So this could be day one, but it is speculation. Let's keep that in mind. And going back to that other type of reversal, you can even say the case for the Russell, that this was an entire range that the average was trading in, and you can see the clear break of the horizontal support. Now this is a much more defined sideways pattern, but technically the break of this horizontal support was your go ahead. Now today's session did give a reversal candlestick, but we would need to see follow through with that in order to validate this candlestick. And at this point, I would say after a reversal has transpired, it could be that we just get a feeble rally back up. And here is the Russell on the 30-minute time frame. This appears to be a bullish falling wedge, and prices did manage to break out of the trend line there that you see, but I see no divergence. I see a slight one on the stochastic, but at this point we're overbought. So, and in usually strong downtrending markets, you get these feeble rallies back up, and they just get slapped back down. So the fact that we're overbought, it could be that this move to the upside is very limited, but a better defined divergence would be necessary to have a substantial move or a considerable snapback contra trend. And take a look at the transports. I had mentioned in Friday's video that this was a type of crawling pattern where prices crawl along the 50-day moving average before they ultimately give way. We weren't sure if prices would first go and retest the 20, but look, we have the 10 crossing the 50, the 20 is sloping down. Prices managed to close back below the 10, and then they also broke this previous support level that you see here. So it was a slight breach, but still you can see that the transports are breaking support level after support level, and they're heading lower. And again, we have the stochastic, another bearish cross. The MACD histogram pushed back down, so things look bearish. Now, something I want to point out is that the Qs did manage to close above the 10-day moving average, but I also want to show you this. We have now broken the trend line on the daily time frame for the Qs, okay? And again, if you really want to look at it, we have this sort of 1, 2, and 3, even 4-day range. Not really a range, but it's, yeah, you can make the case for these two, narrow range candlesticks, and we broke below that support level, holding up there, and along with that we have a break of the trend line on the daily chart. So I just want to point out that the Russell and the transports really gave you the heads up in terms of shifts in the market, and now we're beginning to see that spill over into other averages, suggesting that more weakness is to come. Now, one thing I'm looking for is to see a close above the 10-week moving average on the dollar index, okay? And today we have this small spinning top. Now this is the weekly chart, so we won't get the final print until Friday, but this also coincides with the 50-day moving average on the daily time frame. So we're really looking for a break above this level and try to exceed these highs in order to get that. The stochastic on the daily time frame is still bullish. We are, again, with a spinning top and at a level of resistance, it's possible the dollar could pull back, but to have it so that the market averages break down, the dollar is obviously going to continue its uptrend, its short-term move to the upside, and that's what I'm looking for. And here it is up close. I just want to point out that the dollar's coming in at a previous resistance level of right around 79.50. There is a gap here, and oftentimes these gaps do get filled. We are in somewhat of a rising wedge, but again, this overall pattern looks very bullish, and it could be that we're in like an ABC move. So I'm really just watching the retracement levels. There is negative divergence, the stochastic is oversold, and we've barely pulled back. So, a break above this level, and if it can maintain that, then we would almost certainly go back and challenge these highs right around the 80-10 level. So just be watching for that in the days ahead. And I had mentioned before, Apple has been the driver for the market pretty much, and with today's sell-off we have not completely broken this trend line, and this dates back to late January. You can't really draw a trend line for a parabolic move. You can at least the way to do it is to draw an arc leading up to this parabolic move, and once the arc has been broken, that is your sell signal. But here we have a fairly accurately drawn trend line, and you can see the wick of today held up right at this trend line. It points back to this here as well as this point. It's slightly at this point. The MACD has turned over, and we would need to see a cross tomorrow for this to officially break the trend line and we close below the low of today's session. Again, like I talked about, the range that we've discussed, where you can call this the top if we break the range of these three candlesticks, and we did that today. Like I said, to add confidence to this pattern, we would need to break the trend line, see a series of lower highs and lower lows on the hourly time frame. The stochastic on the daily time frame has given a cross, and this MACD, the way it has curled like that, I mean, it's touching the signal lines. And let me just go ahead and give you that number. That is 526, a decisive push below 526, and we need to see the stochastic come further down. We would need to see a cross on the MACD. That would really get the ball rolling.